All right, so let's say that you are bullish on the broader market for whatever reason, and as a result of that, you wanted to make some trades that would reflect that overall assumption. And so common sense might tell you that you should be making bullish trades on a variety of individual stocks that you like. And for the most part, that's definitely true, but as you'll see in this video, that's not always the case because every individual stock has a unique relationship with the broader market, right? So for example, if the S&Ps go up by 1% on any given day, some stocks might go up by a similar amount, other stocks might go up by more than that or less than that, and some stocks might even go down when the S&Ps go up. And so ultimately, because of these unique relationships, in some cases, for some stocks, you would actually have to be bearish on them, make bearish trades essentially, to be bullish on the broader market. And I'll show you examples of that in this video. And in particular, I'll be teaching you guys about the concept of correlation, which comes from the world of statistics, and it basically allows you to quantify the exact relationship between two things. And for the purpose of this video, that's going to be between an individual stock and a major market index, like the S&P 500. And ultimately, you're going to see how to use correlations in ThinkOrSwim here to figure out the exact kinds of trades you should be making to reflect your overall broad market assumptions. But as always, before we dive in here, in case you are brand new to the channel, my name is Scott Reese, and I'm here to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in case you want to see more trading or investing content after watching this video, you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, so first off in this video, I want to give you guys a brief rundown on what correlation is and how to use it. So essentially, correlation is a series of calculations that use a time series of data between two different things that, like I mentioned, allow you to quantify the exact relationship between those two things. And so for the purpose of stock correlations, the way this is going to work is these calculations are going to use a time series of daily price movements between a certain stock and the S&P 500 to then figure out their exact relationship. And ultimately, the output of these calculations will always be a number between -1 and +1. And the main things to remember here about this is if you get a number of exactly 1, that means the stock and the S&P 500 have a perfectly linear relationship. Which means if the S&Ps go up by 1%, then the stock is also going to go up by exactly 1% or some multiple of that. Could be 2%, 3%, even 1/2 of 1%, doesn't matter. The point though is, let's say for the sake of example, the stock moves by 2%. The point then is every time the S&Ps either move up or down by 1%, the stock is going to move in the exact same direction by 2%. That's a perfectly linear relationship. Now, you'll never actually find a stock that has a perfectly linear relationship with the S&P 500. So basically, if you get a number that is very close to 1, or I should say, the closer you get to an output of exactly 1, the more and more closely those two things are going to move in lockstep to each other. And then conversely, if the output of these correlation calculations is exactly -1, that means the two things have a perfectly inverse relationship. In which case, if the S&Ps went up by 1%, then some stock with a correlation of exactly -1 would move down by exactly 1% or some multiple of that. But again, you'll never find a stock that has a perfectly inverse relationship with the S&P 500. So once more, the closer you get to a correlation of -1, that means the more and more those two things will move in a opposite fashion to each other. And then finally, if you get a correlation of exactly 0, that means there is no relationship between those two things whatsoever. So again, if the S&Ps go up by 1%, then some stock with a correlation of 0 can do whatever it wants. It can also go up by 1%. It can go down by 5%. Does not matter. There's no relationship. Okay, so now with that being said, at this point, we're going to jump on over to ThinkOrSwim here, and now I'll show you some very detailed examples of how to apply these correlation concepts to figure out the kinds of strategies that you should be using to reflect your overall market assumptions. So let's get started. All right, so first off here in ThinkOrSwim, what I'm showing you in this chart is SPX, or basically the S&P 500 index. And essentially, whenever you look up a correlation metric or a correlation indicator in ThinkOrSwim, what it's going to do by default is it's going to compute those correlations for whichever stock you're looking at currently relative to SPX or relative to the S&P 500. And that's pretty much exactly what you want already, right? The whole point of doing this, the whole point of looking at correlations is to see how an individual stock moves relative to the broader market. And in my opinion, the best measurement or the best index of the broader market is the S&P 500. Now, there are two main ways you can look up the correlations in ThinkOrSwim. Number one is you can come up to the Market Watch tab and go to your personal watch list. And of course, if you don't have a watch list in ThinkOrSwim, that's actually going to be the first step. You need to have a watch list. So in this case here on the left-hand side, you can see all the ticker symbols for every stock that I have in my own watch list. And right now, everything is sorted alphabetically. So for example, AA is Alcoa, AAL is American Airlines, Apple, so on and so forth. And then in all these columns on the right-hand side here, these show you various metrics about each one of those stocks. So for example, in these two columns, they're showing you the bid and ask prices. Next to that, you have the daily trading volume, at least so far, because right now the market is currently open. Next to that, you have the daily open price, the high of the day, the low of the day, so on and so forth. And so, as I'm sure you can guess here, you can also add a correlation metric to your watch list as well. And to do that, it's very simple. We simply come over to the right-hand side and click on this very, very small little gear icon, and then go to Customize. Click on that, and that brings up a window over here. And on the right-hand side, you can see all the various metrics I currently have shown on my watch list. And then on the left-hand side here, these are all the other metrics that you can choose from as well. And there's definitely quite a few of them. So also on the top, you can search for one in particular as well. In this case, I'll type in CORR for correlation, and there we go. First one at the top there, click on that, and then go to Add Items. And there you go. Now you can see it on the right-hand side. And also, if I hover my mouse over this text right there, you can see the configurations, the default configurations of this correlation metric. And so in particular there, you can see the length is 10, meaning it's going to look at the past 10 trading days for the individual stock that you're looking at, and also the past 10 trading days of SPX. And based on the price action over that time, it's going to compute the correlation. And then also, as you can see there, it says the correlation with security is SPX by default. And so now once I've added the correlation study to my watch list metrics here, I can simply click OK. And there we go. It's been added to the right-hand side in a new column. And one of the cool things you can do with your watch list in ThinkOrSwim is you can sort your list based on any one of these columns. So for example, if I wanted to sort my list based on this new correlation column, I can simply click on the column header here, and there we go. Now everything is sorted in ascending order based on the correlations, beginning with the one up top here with the most negative correlation, and then going down the list, the correlations get larger and larger, or basically more and more positive. So for example, let's take a look at the first one here. This is UAL, or United Airlines. And right now this one has the most negative correlation on my entire watch list. Right now it's negative 0.57. And so if you recall from earlier in this video, I showed you that a correlation is always between -1 and +1. And specifically, the closer you are to -1, the more of an inverse relationship the two things are going to have. So in this case for UAL here, this stock over the past 10 days has been moving in a very opposite fashion with the S&P 500. And I can also show you that visually as well. If we come over to the charts tab real quick and then go to the flexible grid sub tab. And so what you're seeing here are two charts side by side. The first one is SPX, and then bottom one down here, let's change it from the VIX index to UAL. And then now on both charts, we'll zoom in a little bit over the past 10 days. And here we go. So in the SPX chart up top here, pretty much right in the zone where you can see my cursor, this is the past 10 trading days or the past 2 weeks or so. And obviously, as you can see, during that time, SPX has moved down pretty significantly. But now what has UAL done during the same time period? Well, if we come back down here to the UAL chart, as you can see, this stock has done pretty much the exact opposite. It's done nothing but go higher. So again, this is why currently UAL has a negative correlation with the broader market, because these two things have been moving in a very opposite fashion to each other. So therefore, if you are currently bullish on the broader market right now, and you wanted to make a trade on an individual stock that reflected that, well, if you chose to make that trade on UAL, you would not want to make a bullish trade on this stock, right? Because if these two things have been currently moving opposite to each other, that means if the S&P 500 begins to recover and starts to move higher in price, which is what you want based on your assumption, then chances are UAL down here is going to start to sell off. And as a result, if you placed a bullish trade on UAL to reflect your overall market assumptions, then you are likely going to find yourself losing money even if your assumption is actually correct. So ultimately, if you did want to trade UAL here, you would actually want to make a bearish trade, perhaps by selling a call credit spread or buying a put debit spread, shorting the stock, whatever you want to do. But essentially, you want to make a bearish trade to be bullish on the overall market. And then for a second example, if we come back to the Market Watch tab again, and I'll go ahead and click on the correlation header one more time. And there you go. Now it's sorted the list in descending order, where the stocks up top have the most positive correlations with the market. So now in this case, at the top of my list is SBUX, which is Starbucks. And right now this has a correlation with the S&P 500 of 0.91, almost exactly 1. So this means based on the past 10 trading days, Starbucks and the S&P 500 have moved very, very closely to each other. When the S&Ps go up by X amount, so does Starbucks. And when the S&Ps go down by a certain amount, again, so does Starbucks. And once more, we can confirm that visually as well. If we come back to the charts tab, and same thing up top, we have SPX, and then we'll change the bottom chart to SBUX, and then we'll zoom in on this chart here. And there we go, past 10 trading days or so. As you can see here, the Starbucks chart looks very, very similar to the SPX chart. So these two things have moved in almost perfect lockstep to each other. And therefore, as a result of this, if you are bullish on the broader market and you wanted to trade Starbucks to reflect that assumption, in this case, you would also make a bullish trade on Starbucks. So you could buy the stock, sell a put credit spread, sell a naked put, whatever you want to do. But chances are when SPX does start to recover, it's going to bring up Starbucks along with it. And then lastly, if we come back to the Market Watch tab one more time and we scroll down a little bit here, as you can see, there are a few stocks down here with a correlation of almost exactly 0. And in fact, right now, it looks like Capital One, COF, has a correlation of exactly 0 with the broader market. So one more time, we'll come back to the charts and take a look at those two things side by side. On the bottom, we'll change this to COF, and then go ahead and zoom in a little bit. And so now, as you can see, comparing these two charts, on some days, Capital One was moving a lot higher, while SPX was moving lower or staying just about flat. And then very recently, in the past couple of days here, SPX has sold off significantly, and so has Capital One. So basically, some days Capital One does follow the market, other days it does not. And that's why there really is no correlation between these two things over the past 10 days. And ultimately, as a result of this, I personally would not choose Capital One to make a trade that would reflect my overall market assumptions. But that being said, in terms of adding more diversification to my portfolio by including stocks that are pretty independent of what the stock market is doing, Capital One could be a great opportunity. But the bottom line here is before you make a trade to reflect your broad market assumptions, take a look at the correlation between that stock and the broader market. And based on that correlation number, that's going to help you figure out what kind of strategy you should be using. And then finally in this video, there is a second, slightly more different way of looking at the correlations in ThinkOrSwim. And to do that, we'll come back to the regular charts tab here. And we're going to add a brand new study or new charting indicator to my charts here. And to do that, we simply click on this icon right there. And in a very similar fashion to what you saw on the Market Watch tab on the right-hand side here, these are all the various indicators I currently have showing on my charts. And then on the left-hand side, these are all your possible options for adding new ones. So up top here, let me go ahead and search for CORR for correlation. Click on that. And then we'll go to Add Selected. And so now that's going to add a visual correlation study below my IV rank study on my chart. And so we'll just click on OK. And then finally, we'll come up here and take a look at UAL again. Why not? And there we go. Down below, you can see a visual representation of the correlation between UAL and SPX over the past 1 year. So like I mentioned, this is a very different way of seeing the correlations because with this indicator, you can see how the correlations change across time. So right now, UAL and SPX have a very inverse relationship, right? There's the negative 0.57 number that you saw on my Market Watch tab or on my watch list. But the correlation between these two things can and will change as time moves forward. Right back in early March, for example, of 2022, UAL was very positively correlated with the S&P 500. Right during this time, the correlation was around 0.9. So back during this time, if you wanted to get bullish on the broader market by trading United Airlines, during this time period, you would have made a bullish trade. But again, fast forwarding to today, now the correlations have entirely flipped. So UAL has been skyrocketing while the market in general has been selling off. So once more, if you wanted to get bullish on the broader market, then right now you would actually make a bearish trade on United Airlines. And one final thing to mention here about looking at correlations is that this stuff will not give you a guarantee of what's going to happen in the future. Right? So for example, it's not guaranteed that if the S&P 500 does start to increase in price again, that UAL is going to sell off with 100% certainty. All I'm saying is the chance of UAL coming back down if SPX does start to rally, the chance of that happening is significantly high. And obviously, as I just showed you here, correlations can and do change. So if and when SPX does start to recover, there is a chance that UAL does continue to move up higher along with it. And at that point, the correlations would flip back to being positive. But with the correlations right now being so negative, and also if you take a look at the RSI indicator, which shows you how overbought or oversold the stock might be, and currently this indicator is showing that UAL is definitely overbought right now. And also considering the stock has hardly even had a downtick in the past several weeks here, again, I would say the odds or the chance of a sell-off happening here soon are very, very high. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.